Welcome back to Alpha Recap. I'm glad you joined us after the bell. Today we're unpacking a risk-on session that lifted benchmarks and kept oil stubbornly above $100 per barrel. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. It was an interesting day. A broad rally, tech leadership, and energy playing a meaningful supporting role. Lots to dig into.
Let's start with the quick snapshot. How did the major indexes finish?
The S&P 500 closed just over 1% higher. The Nasdaq 100 finished up about 1.1%, and the Russell 2000 was up just under 1%. So it wasn't a narrow move. Big cap growth led, but small and mid caps also participated.
Big move.
Yeah, that tracks.
Walk me through the narrative. Why did markets close like this?
So, what really stood out here is a few things converging. First, momentum in large tech names carried on from prior strength, and that carried the Nasdaq 100 a bit more than the S&P. Second, we saw fresh flows into crypto-related products, and that seemed to lift crypto-linked equities, which helped the risk-on mood. And third, oil holding above $100 per barrel gave energy and cyclicals a boost. So the tape had both growth and commodity support.
Hold on. Crypto flows showed up in equity performance?
Yes. I mean, when you step back and look at this, ETF flows into crypto vehicles often spill over into listed names tied to that space. Today, those inflows coincided with gains in crypto-related stocks, and that added to the overall appetite for risk.
Interesting. Give us a sector-by-sector tour. Where were the biggest winners and losers?
Technology and communications led. Software, cloud, and select hardware traders outperformed. There were also headlines around big tech buying carbon credits that helped green technology and software suppliers. Energy names were firmer because Brent stayed above $100 per barrel, and that lifted energy-related capital goods suppliers. Industrials and materials had pockets of strength. Airbus deliveries were cited as constructive, while financials were mixed, pressured in spots by idiosyncratic headlines like the bankruptcy news in fintech. Real estate struggled in places, while utilities showed selective strength where companies had project wins.
Not what anyone expected.
Honestly, I was a bit surprised by the breadth. Often when tech leads, you can see narrow leadership, but small caps chimed in today, which made the advance more convincing.
Real estate had headwinds, right?
Right. And the other thing is the real estate group was dealing with specific redevelopment news and deal dynamics that weighed on the sector. So it wasn't a uniform picture.
You mentioned big tech carbon credit activity. That's a little outside the typical headline box. Why did that matter?
Big tech participation in carbon credit markets is an unusual but constructive narrative because it creates demand for related services and software, and it draws attention to green technology suppliers. Analysts note Microsoft was reported as a leading buyer in a surge of corporate carbon credit activity, and that helped some niche stocks perform. It's an example of a non-traditional catalyst shaping performance.
And there was also a partnership in the AI supply chain?
Yes. Poet Technologies and Lydon announced a joint development for optical modules aimed at AI applications. I mean, when you step back and look at this, partnerships like that can accelerate roadmaps for specialized components and broaden addressable markets for suppliers. That news bolstered semiconductor and optical equipment names.
Quick reactions. What stood out among individual corporate items today?
Microsoft's carbon credit activity was one. The Poet and Lydon deal was another. Airbus was flagged for about 75 deliveries in the first quarter, which is constructive for commercial aviation supply chains. On the flip side, Mocafy's bankruptcy and court developments cast a shadow over some fintech-adjacent names. And there were a handful of smaller filings and 8Ks. Routine, but worth watching if you follow specific small caps.
Let's talk macro and Fed implications. You used to say there were cross-currents.
Two main cross-currents stood out. First, oil staying above $100 per barrel keeps upside risks to inflation on the table. Analysts note that persistent energy strength complicates the disinflation story and could affect consumer demand down the road. Second, Renewed risk appetite, visible in tech and crypto flows, suggests market participants were comfortable with the current policy outlook for now. But the link between equity rallies and fixed income pricing is key. If Treasury yields rise meaningfully on growth or inflation repricing, the rally could face resistance.
So markets were pricing a data-dependent Fed.
Exactly. The tape suggested investors were assuming the Fed would stay data-dependent. With oil elevated, incoming CPI and PCE prints, plus employment data, will be watched closely to see if the disinflation story continues or if inflation risks reassert.
Short segment, breadth and technicals. Was today convincing?
The fact that the S&P 500, the NASDAQ 100, and the Russell 2000 all finished higher suggested the advance wasn't narrowly concentrated. That said, leadership still skewed to growth and tech. Analysts would want to see improving measures, like new highs versus new lows, and advancing volume versus declining volume, to confirm a sustainable uptrend. Also, watch implied volatility. Falling volatility with rising prices would be a cleaner bullish signal. Divergence would be a caution.
What's the historical context here?
Historically, rallies led by tech with commodity support can show a two-step pattern. An initial advance, then some chop as investors digest earnings and inflation data. So periods like this have cropped up in late cycle or sticky inflation regimes. Traders and strategists note that the market will be sensitive to near-term economic releases and corporate guidance.
Before we close, what are the key things to watch tomorrow?
First, energy headlines and oil prices. Any further move above $100 or a sharp pullback will matter for cyclicals and inflation expectations. Second, Fed commentary and upcoming CPI or PCE prints. Even Fed speakers will be parsed for clues. Third, earnings and company-level developments in tech, industrials, and energy that could reinforce or challenge today's rotation. And fourth, continued ETF flows into crypto products. If those persist, they could sustain the risk-on tone.
Final takeaways. Give us the bottom line.
Today was constructive. The S&P 500 finished just over 1% up. The NASDAQ 100 rose about 1.1%, and the Russell 2000 was up just under 1%. Momentum suggested a cautiously bullish near-term outlook, driven by tech leadership and energy strength. But the persistence of elevated oil and the cadence of upcoming macro prints mean the path forward had risks. Analysts say confirmation would require improving breadth, steady or falling bond yields, and clean earnings beats or constructive guidance from major tech and industrial names.
Thanks. That's a helpful wrap. Quick reactions. Good day overall?
Yeah, absolutely.
All right, thanks for listening. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. See you next session.